Okay, so it's the 2016 published account. Yeah, same process as normal. You need to do out your workings page where you're basically going to do all your work, and then we just start slotting the numbers in. Um, so again, that's a skeleton is like so, and really the ones that can go straight in generally are turnover, investment income, profit on the sale, interest payable, corporation tax, dividends paid, profit brought forward. On the second page, financial fixed assets, which will be your investments, can go in. Stock can go in. Bank can go straight in. Trade creditors, dividends due, you'd have to work out. And then your finance by the debentures can go in, issued shares. Okay, the rest of them are combined numbers. So my way of doing it is just start up here at vehicles and work my way all the way down to working seven, knowing that within these workings, uh, one of these will probably be to do with the notes. So working seven is to do with contingent liabilities there. So we just need to be aware of that. So so we start up as we said at the top. Creditors is two, or sorry, vehicles of cost is 290. So vehicles of cost is a tangible. So again, you do not have to write the words here. You would just be writing in the number, saving yourself as much time. Accumulated depreciation will go into tangible as a minus. 6% investments. So they're the ones you can put straight in as your fixed assets, as your financial fixed assets. So 250. But I will do my investment income working now. It's one of only a couple of workings I have to do. So my investment income, 6% of the 250. You have them for a full year, so you don't have to worry about months, which is 15,000. I go to do my less paid straight away. So investment income paid is 5.4. So that's 9.6 is my due, and the 9.6 goes into debtors. We know investment income due goes into current assets. There's going to be no space for it, so 9.6 into our debtors. Buildings will cost 700. Now, I said in the last video, you change that 700 to the revalued amount. So buildings, they're revalued 800,000. So we're going to put that in uh, tangible fixed assets, 800,000. Now this is just true. Having done loads of these questions, your accumulated depreciation, you're going to revalue your building, so your accumulated depreciation always goes in your revaluation reserve. Okay, investment income we've done. Debtors 129, so we'll put that in debtors. And creditors is one of the ones I say can go straight in, 94,000. Now, in the off chance that any of these change, obviously you can just correct them as you go. Stock is opening stock, so that's cost of sales. What's that? 91,000. Patents 33,000. That's intangible. There'll be a little working to do with that. Admin will go into admin. So it's 203. And distribution will go in distribution 121. Okay, purchases 1165 will go into your cost of sales. And sales 1799700 will go into turnover. Now, I don't know if you watched the last video, but in the last one there was returns in underneath that. And returns in are sales returns. So if there's returns in, you take it away from the 1799700 to give you your turnover. Profit on the sale of land, that's one of my ones that goes in. 35,000. I managed to skip rental income. So rental income is a credit. So that's other operating income. Dividend paid, we know that can go straight in. Bank, 90,000 is a current asset. We'll put that in to our balance sheet. VAT, 21.3 goes in, is a tax, so it goes into taxation. Now, if VAT somehow happened to be a debit, which could be, of course, you will put that into debtors. The money that will be owed to us. Profit and loss, 72,000 is a credit, so we're adding it on. Again, if it was a debit, you would take it away. The two share capitals are 600,000, so they can go straight in. Provision for bad debts, 15.5, so that goes underneath debtors. Debentures, 200,000 into debentures. 57%, 2018, 2019. Discount is a credit, so other operating income. And debenture interest paid, we're going to work out debenture interest, which I really should have done when I saw the debentures. But anyway, just go back up and do that. So debenture interest is 7% of 200,000, which is 14,000. That can go straight in. And should put my investment income in as well. And my investment income due then, or sorry, my debenture interest due, 14,000 minus whatever we've paid, which is 12.2, gives you 1,800. And that will go into other creditors. Okay, so that's everything from the main body of the question. We can say then, as a general rule, but not always, pretty much as a general rule, all of these things go in twice, once on each page. So the first one is stock, which is your closing stock. So we know that on our first page, closing stock is a minus. And then on our second page, closing stock is a current asset. So it's a minus in our cost of sales. The patent was acquired on the 1st of the 1st. It's been written off over 7 installments, and it's the amortization is to be included in cost of sales. So it goes down by 11,000 a year. So patents written off, it's got to be 11,000 there. And then in our tangible, it's 11,000 there. So that gets you to the 22,000. Provide for debenture interest due, investment interest due. We've done that. Auditors' fees are 18,000. Directors' fees 26. So on the first page, they're both going into admin. Okay, corporation tax 56,000. On the first page, that has its own spot. Okay, and all three of those have to go in on the second page. So the first two auditors and directors, 18 and 26. Go into other creditors. The taxation, 56 goes into taxation. Both, all three of them are going into current liabilities, but obviously the corporation taxes into other creditors, it's corporation, it's taxation. Included in the admin is a receipt. When it's a receipt in an expense, you add it back on. A receipt for 8250 for rental income. Now this is one of the ones that doesn't go in twice, once on each page, because it's just a movement. So you're taking it out of admin by adding it on, and you're putting it in, it's income, to other operating income. Okay, so take it out of admin by adding it on, and then add it into other operating income by adding it on as well. Included in the, during the year, land adjacent was sold for 120. Now we've done that. At the end of the year, the company revalued its buildings to 800,000. We've done that. What we just need to do is that the buildings have gone from 700 up to 800,000 in the revaluation reserve. That's a revaluation surplus of 100,000. You don't have to worry about the land being sold. That's already dealt with the profit of the sale of land. So the depreciation of buildings, I have to do a little working here. So it's 2% of the original number. It's not the revalued number. It's just 2% of 700,000, which is 14,000. If it doesn't tell you where it's going, it goes into admin. So the 14,000 will go into admin. Sometimes it'll tell you to split it up. In this case, it hasn't. It also, because we're revaluing the buildings, that depreciation disappears into the revaluation surplus. So on our second page, you don't have accumulated depreciation. It goes into revaluation surplus. You're also asked to depreciate vehicles, 20% of cost. So 20% of 290. Which is 58,000. And 58,000 is a distribution expense. And it also then will go into your tangible as a minus, so you're not revaluing them. So take away 58,000 from them. Now a former employee has made a claim for the 60,000 for internal dismissal, and it's saying the company's legal advisors have advised that the company will probably be liable. So the accruals concept says you have to account for stuff if it's likely to occur. So it doesn't matter. You might win or you might lose, but if you think you're going to lose the case, you have to include that as an expense. So that 60,000 will go into administration expenses. So the likely claim of 60,000 goes in expenses. Now, in the old days, you would then include that in what's called contingent liabilities. So something you have to put money aside for in case you lose. In the modern answers, that 60,000 goes into other creditors as well. So the question will still balance putting it into contingent liabilities. It'll just balance 60,000 more at both sides. So I'm just going to copy the marking scheme and put it into other creditors. We would have learned in college and everything that goes into contingent liabilities. Anyway, that's everything done. It's just a matter of throwing the numbers in now and finishing off the question. So we'll just total them. bear with me, this will take a minute. So your other operating income then it should be 60, oh, 67,250, 22,000 there. Debtors would be 123,100. Taxation 77,300. Other creditors 105,800. And then your tangible is 928. And your revaluation reserve is 470,600. Okay, so we could just start throwing the numbers in. So cost of sales 1191. So that gives you 608,700. The distribution was 179 and 329,250. Okay, so the other operating income is 67250. So it's a case of taking away the expenses and adding on the other operating income. Add on your investment income, add on your profit of sale, and take away your interest payable. Take away your corporation tax. $147,700. Take away your dividends paid. There's no dividends proposed. $104,700, and then add on the 72,000. That gives you 176,700, which I'll put in there. Barring a calculator mistake, once you've everything in twice, really it's hard to go wrong on these, so it should be a good enough question for you. So the intangible was 22, 33 minus 11. The tangible is 928. And just add those three together. Your debtors then is 123,100. Trade creditors 94. Dividends due 0. Tax due and other creditors. Tax due is 77,300. And other creditors 1058. Oh, jeez, sorry. 105,800. So we'll just add those together, take them away from each other. And one minus the other is your working capital, which you'll add on. One, two, 1, 2. All right, your finance by the 200,000 is in, the issued shares is in, the revaluation reserve is the last thing to go in, which is 476. How is it that? Sorry. So it's 235,300. Okay, so we'll add those three together. Then add on your answer. get 1212. So we have that correct. Now again, that was only worth 66 out of the 100 marks. Okay, so don't think your job is done. You're only up to a, remember that is a H4. Okay, so we need to get the accounting policies done. And most of the ones are easy. So you'll get the first two, 1, 2, and 4 you'll be asked all the time. Then you're asked either dividends, which are in this case interest, contingent liabilities, tangible fixed assets, whatever it might be. So let me see. Insert. I'm going to just see if I can put in a comment box or text. There we go. So for number 1, the accounting policy on tangible fixed assets and stock. This will take a small bit of time if you don't practice it. So for those of you struggling with time, you have to actually practice this. So buildings were revalued during the year, or revalued at the end of the year, so 2015, and are included in the accounts at their revalued amount. Vehicles are shown at cost. Depreciation is calculated in order to write off the value of fixed assets over their estimated economic life as follows. Buildings, 2% per annum, and it was straight line in this case, and vehicles, 20% of cost. If it was reducing balance, you would write 20% on a reducing balance basis. So stocks then, because it asks you to comment about stocks, we always say the same thing. Stocks are valued on a first in, first out basis at the lower of cost and their realizable value. Okay, so that's working 1 done. Operating profit. Is arrived at after charging the following. Now all we're doing in this is including the things that are in cost of sales, but wouldn't traditionally be cost of sales, that are in distribution, that are not distribution, and that are in administration, but are not administration. The things you do not include, though, are the ones that have just been moved over to other operating income. It's always the same ones you include, basically. So what do we charge? So we charge depreciation, and you just show the total. So depreciation in total is 58 plus 14, so that's 72,000. You've also included patents written off. That was 11,000. That was in your cost of sales. You've included directors' remuneration and auditors' remuneration. And I told you don't have to include this rental income. So directors and auditors. So they were 26 and 18. So it's the same ones, okay? You don't have to include the contingent liability because there's a separate note on the contingent liability. So you don't have to include the liability 60,000. I suppose if you put it in, you wouldn't lose any marks. Dividends is next. So dividends are showing what your ordinary dividend is. So, and you're showing what your preference dividend is. So your total dividend paid is 43,000, of which 8% of 120,000 which is 9,600 is your preference dividend. So that is 8% or 8 cents per share. Your ordinary dividend then has to be the remainder. So of the 43,096 is preference, that makes, what would that be? 96 taken away from 43 would be 33,400. And what we do is we divide that by the number of shares. So there's 480,000 shares. That's 6.9 cents per share. So take your total, divide it by the number of shares, and that gives you the price per share, or the dividend per share. Okay, so that's the dividends one done. And the tangible fixed asset is our sort of big one. It's nearly like a working. So we go land and buildings. We go vehicles. And we go total. So what we're looking at is what the value is on the 1st of the 1st and what the cost is at the 31st of the 1st. Okay, we're doing the same with depreciation, but we'll do the cost on the 1st of the 1st. So it's easy enough to work out the one at the end of the year. So the cost at the end of the year for buildings is the revalued amount. So we look to the revalued amount and it is 800,000. For vehicles didn't change. So vehicles, we didn't buy any, or we didn't sell any, so they're 290. So the total then is the two added together. What happened during the year, right? So the cost with vehicles, nothing happened during the year. So that's 290 and nothing has happened in between. For buildings, a few things have happened. For land and buildings, we disposed of the land. So we got rid of the land costing 85,000. Okay, so we revalued from 700,000 up to 800,000. So we've gone up by 100,000. We'll just get rid of this line here. So we've got some number minus 85 plus 100 is 800,000. So that must have been 785,000. It's easy enough to know anyway. 785 minus 85, the land gives you 700,000. So if you take the 700,000 and add on the land that you sold, the cost price of it, that'll give you your cost at the start of the year. But 785 minus 85 gets it into 700,000. Add on 100,000 to get you to 800,000, which is your revalued amount. Okay, so That's our cost. We do the same for our depreciation. We have two things that can happen. We have charge for the year and we have transfer on revaluation. Basically, you get rid of all the depreciation on what you have when you revalue it. So that gives us our accumulated depreciation on the 31st of the 12th. So what have we got? For land and buildings, we had accumulated depreciation at the start of the year of 121,300. And for our vehicles, it was 104,000. Okay. The charge for the year, well, there are answers from here. So for vehicles 58 and for depreciation, for buildings 14. So 58 and 14. And what do we do? Well, we got rid of all of the depreciation on the land and buildings because we revalue them. So that is 135,300. We didn't revalue the vehicles. So then obviously our depreciation at the end of the year after revaluation has to be 0. Okay. So then we're looking at our value. So the value at the start of the year is cost minus depreciation. So 785 minus 121,300, 663,700, 290 minus 104, and then our value at the end of the year is your ones at the bottom. So 800,000 minus 0 is 800,000. Sorry. And 290 minus 162 gives you 104. That gives you your 904. Sorry, 290 minus 162 is 128. So 800,000 and 128 is 928, which is our tangible fixed assets for the question. So that's the working on that. And then we've got our contingent liability. So you're basically going to rewrite out what's written in this working here. So what's happened? The company has provided for 60,000 euros in the accounts for a claim made for unfair dismissal by an employee. That's done by an employee. The company solicitors are legal advisors. That's what it says. So we'll use that. Have indicated or have advised that the company will be liable. For the full amount. Okay, so if they didn't think it'd be liable for the full amount, you wouldn't include it in the accounts, but you would have a note saying that they don't think they'd be liable for the full amount. Okay, so that gets you up to that gets you up to 88. Then the last 12 marks, you're still not at H1 level. So how does explain why it's important that financial statements are properly regulated? So, well, why do we think it's important? write down the answers for this. Oh no. So let's just copy and paste this. Okay, I can. So this is for 1. Why is it important? So to ensure accounts are consistent from 1 year to the next. To ensure that accounts can be compared from 1 year to the next. That accounts can be compared between companies. That accounts are available to external users. And to so that the public can trust the financial information provided. Now, I don't know how many of them are actually needed, probably 3 or 4 of them. Explain, or how does the European Union regulate the presentations of accounts? Well, the European Union issued directives. Which are what are they? They be instructions to member countries that must be followed by member states. So they're basically legally binding. What's the point? Let's make sure that all member states are consistent in their approach. Okay, so that should get you very, very close to 100 to the 100 marks. Okay, that's us done. That's that one done. I think I have done that the Sexton question already. I've definitely done the question 1. I'll probably do the club account. Oh, they came up last year. I won't do the club account. I'll probably do the incomplete type B as if it was a 100 mark question as best I can. And I'll also do question 8 and question 9. Well, question 8 came up very similar to that last year. But I'll certainly do question 9, the cash production budget. I'll have to teach you to do that, so we'll wait till after the midterm. Anyway, thanks lads.